Hello everyone. In this session, I am going to explain part 2, which is investment management, chapter 1, basis of investment product. In previous videos, which is based on foundation for finance, I have explained basis of economics, banking, as well as the financial statement. Now move forward to today's content, introduction of investment, why we require investment goals, time frame, then various investment products which we have. Now move forward to first introduction. If you are if you just observe this picture, here we have many things which we have to consider, such as the household, then firm. Here this is government. Householders means normal people will survive, provide services to firm, business firm, and in returns they will get income because they will pay, firm will pay salary, wages. Then apart from that, if household industries, if the household means normal people will invest in firms, they will get a dividend, interest, profit that they will get. But normally people will pay tax to government, and government will provide services. Government will provide same amount to firm, and government will invest in firm. As a result, they will get taxes from them, as well as returns also they will get from firm. So this picture will indicate that household industries, if you know or not, directly or indirectly, you are doing investment. Now let's see what is investment. Investment is very simple. That is, it is an asset or item acquired with the goal of generating income or appreciation over time. That is, if I want to invest, means I have two ways. First, investment may generate income in two ways. That is, first, profit. If you make sale, if you sell that asset, means you will get profit. Then another one is, if investment is made in return generating plan, means we have invested in such a manner that you will get steady income, accumulation of gain, that is income. So in both types, you will get income. Investment is primarily aimed at obtaining an additional source of income or gain from profit from the investment over a period of time. That is two things: one, additional source of income, as well as profit. That is said to be income. Normally, income investment can be made up in two ways. One is physical. In the form of real estate, you can invest, that is on land purchase, you can make land purchase. Then next, that is gold also you can purchase, that is physical asset you can, where you can invest. Apart from that, you can also invest in financial assets such as stock, bonds, mutual funds, retirement schemes, and so on. Then why we want to invest? We want to invest because we want to make our money safe. If you want to make if you want to safeguard your money, means investment is best. Take for example, if you just invest in your bank, if you have a saving bank account, means if you just invest there, means a bank will custody your investment, but and as well as money will grow. Means they only provide 3 or 4% on saving bank. Apart from that, not only they are saving, but your money will also grow, and steady income also you can make out of that small portion of your income. Or else, if you have a fixed deposit or recurring deposit, means you can get a steady income you will get. You can also minimize tax if you invest in like PPF, provident fund. If you invest or somewhere else where you will get deduction, where you will get ATC deduction up to 1.5 lakh deduction you can get. So you can reduce your burden, 1.5 lakh burden you can reduce. Apart from that, retirement, for the purpose of to live happy life during after retirement, and to maintain same lifestyle, if you can also invest. Then this is also why you want to invest. Then at last, to maintain, if you have any financial goal that I want to purchase this home, I want to purchase that vehicle, means if you invest from now on, means you can get that things and you can achieve your goal. Now coming to investment goal, what are the goal which you have to set before investing. So normally, if you want to invest in stock to generate profit, you would benefit from addressing one specific question. The question is very simple, that is how much of a return you wanted to see and how long you wanted to sustain it for. Means how much you want and how long you want. And apart from that, important goals for investment might include such as generating income, how much income you want to maintain same lifestyle, preserving capital to maintain same capital, how much amount you have to make, that is to safeguard your investment amount. Then to maintain liquidity, how much amount you have to invest and where you have to invest, that one. Then speculation without getting losses, making false profit. Speculation means getting gain or loss both, but without incurring loss, how to make a first profit. And that will be your important goal which you want to achieve. Then next, if you focus, we have a time frame for how long you want to invest. Before going to this short term as well as long term, you first have to identify what are your goals. First, you have to identify your goals. Based on that, you have to invest. Suppose if you just want to change your furniture, you make improvement, home improvement you have to do, or else vehicle down payment, the amount is less, so you have to invest in short term investment. If amount is large, if you want to live comfortable after retirement, you require huge amount. Children's this one college fund or for education purpose, to get new house and all. For this one, you require huge amounts. Because of that, you have to invest in long-term goal. You have to make plan. So based on your goal, you have to select whether you have to pick short-term investment plans or else you have to choose or select long-term goals. Then next, what are the products which you have to invest? Where to investment? These are the products which you have through which you will get a benefit. First, bank saving bank, without keeping amount at home, money won't grow. If you just keep amount at home, means it won't grow. Same amount if you deposit at bank, means you will get interest, so money will grow. Not only they will provide you fund, not only they will make your money grow, as well as they are keeping your custody also, they are making. Okay, they are safeguarding your funds. In bank, we also have several like deposit which we have discussed in our previous videos, such as fixed deposit which we have, recurring deposit which you have. With the help of that, you can that is also one of the investment product which with the help of that you can grow your amount. Then government scheme, Sukanya Samruddhi scheme Yojana we have. Like if you observe this picture, it is based on Beti Bachao and Beti Padao campaign. It is depend on that one. Means if you have a girl, then you can invest with, you can open account with her name. But age of girl have to be less than 10 years. If it is, means you will get a benefit. Means you can, and you will get up to this one from 1,000 to 1,50,000 per annum you can invest in this account. Interest rate is high. Apart from that, national saving certificate, I hope you know this one. According to this one, this is the deduction which you will get in section 80C of income tax 1961, up to 1.5 lakh deduction you can avail if you have invested in NSC certificates. Then Pradhan Mantri Jan Dhan Yojana, to provide benefit to all individual, such as bank benefit. Government have taken this initiative and they have make them to open a bank account. We also will provide services such as they will provide pension, they will provide, okay, they will provide insurance services. If you have bank account, means insurance they will provide, accident and all, if something happen means they will provide amount, so on. Many things will be there in this one, Pradhan Mantri Jan Dhan Yojana. Not only this one is free account, zero bank account balance, but other services is also there. The next, Prime Minister Yava Vandana Yojana, this is only for senior citizen, but here rate of interest is very high, that is 7.4% in returns you will get if you invest. But you have to be senior citizen, that is more than 60 years age. Those who are having more than 60 years, they can open this account. Then Savage gold bond, that is you can provide amount to government and they will purchase gold. Then next, retirement saving. This government based securities, this one, okay, this one is government based securities, and they will, and this one is completely safe because government is protecting this one. Then next, retirement savings. For retirement purpose, what are the savings which you have to do? That is why post retirement you require money for medical emergencies, household expenses, as well as other living cost you required to maintain same lifestyle. You have to get amount. Okay, for that one you have to plan now only. And government also have a few initiatives and schemes they have, such as national pension scheme, where you have to invest amount, as well as you will, if you invest in national pension scheme, means 50,000 ATCCD, you will get 50,000 what deduction you will get. Apart from that, up to 1.5 lakh deduction you will get in 80C, section 80C of income tax 1961. Same applicable for public provident fund. Okay, if you are having recognized provident fund, apart from that, if you want to avail this one, means you can open this one. You can also invest in PPF. Here also 80C up to 81.5 lakh deduction you will get under section 80C. Then Atal Pension Yojana is also available. Those who are having less than 40 years, that is this scheme is what eligible. Those who are eligible means from 80 to 40 years. Those who are, means they are eligible for this scheme. Then equity investment, that is investment in shares, stock market. Now, why you want to invest? Why equity investor will invest and purchase shares in a company? Means they have two major expectation. One, capital gain. Another one is dividend. That is out of profit dividend they have to get, and share value have to be increased wealth. That is both they will expect. Monetary difference, if something is there, means they will get capital gain. Apart from that, at the year end, if company is making good profit, means they will distribute dividend. And equity share will be in two kind. One is equity share, and another equity mutual fund for retail investor such as us. Then next, debt. When company or government security entities issue debt instrument, want to raise fund, they borrow from investor. In return, they will promise, okay, they will borrow amount from investor, and they will promise a steady and regular interest to them. In simple, buying a debt instrument can be considered as lending money to entity issuing the instrument. They will provide instrument, it is one letter they will provide at the I have taken so and so and this one such amount from so and so on person, and I will pay you fixed amount. The interest they will pay, that they will return, and they will receive amount from us. Popular fixed interest generating securities are corporate bond, government securities, treasury bills, commercial paper, and so on. Very important things here in debt means the issuer of a debt instrument pre-decide the interest rate you will receive as well as a maturity period. Hence, they are also known as a fixed income securities, such as at the time of issue, like a debenture only, company will promise investor. Suppose ABC, a person have invest 10,000 rupees in one company, and that company have promised that a person to 10% interest they will provide. They have promised, means every year they will pay 10%, that is 10,000 into 10%, 1,000 rupees they will pay up to maturity period. And maturity period is also pre-decided, means up to 10 years. Means for 10 years I am taking borrowing this amount. Once this maturity period is over, they will provide you principal amount as well. Means within 10,000 you have made double. That a person have double his income. 10,000 he have invested, every month he is receiving 1,000 rupees. For 10 years it is 10,000 plus at the end of year he will get his principal amount, that is 10,000. So this is the benefit which you have from this debt. Then next, mutual fund. Mutual fund is very simple. Just pulling in by large number of people is make up a mutual fund. This fund is managed by professional fund manager. That is in simple trust. This is a trust that collect money from a number of investors. They will invest this one. Suppose I am collecting amount from 100 members who share a common investment objectives. That 100 members just want to get a dividend, then it invest them this one money in equities, bond, money market instrument, and other securities. If I am well aware of this instrument, means I can collect amount from my friends and I will invest in shares, equity, and so on. Each investment own units which represent a portion of a holding of a fund. Means they will provide unit, that is you have this much percentage. Suppose I have one share, means of 5,000 rupees, and I have collected 1,000 from everyone. Means I can say you have 20% share you have, or okay, 20% unit you have. Like that you can assume this one. It's just a simple mutual fund. Mutually you are providing fund to one person, trusting him, so that he will provide you benefit. That is a simple meaning of a mutual fund. The next, gold and gold ETF. Now gold is very common investment, but we have major risk, that is theft or burglary. Means someone can, if you have physical gold, means if someone stole that one or someone burglary that one, means what will happen? Okay, so this one is very risky instrument, it is gold. So if you want to invest, means invest in gold ETF, that is exchange traded fund. Is similar to buying physical gold, but the only difference is you don't actually buy the physical gold. Okay, this one is similar to gold, but it is not physical gold. You don't have to go to hassle of storing. You don't have to worry about storing. Instead, the gold bought is stored in demat account, that is in your demat format, paper format it will store, and whenever you want you can sell that. And gold fund deal with investing in gold mining companies. Okay, gold fund is also there. On the other hand, gold fund, they will invest in gold mining companies. Okay, if you want to get gold and you want to maintain this one, you want to purchase gold, means purchase this one demat, and you can make a safeguard your gold. As well as you don't want to purchase gold, means you can invest in gold mining companies. If they get benefit, means they will share you as a dividend, as well as your share value will increase. Then next, it is real estate and REITS. It is just similar to what we have studied in learn in previous slide. Like gold, investment in real estate is another popular instrument avenue. Many in this one investor will invest many investor will invest in real estate, but there may be a problem of liquidity. Okay, there may be a problem of finding buyers. If you I want to sell this one land, means I have to find this buyer first of all. So you won't get what I say, you can't sell property immediately, you can't sell. So that is one of the problem. So hence you have one option, that is this one. Real estate investment trust is a corporation, trust, or association that invests directly in income producing real estate and is traded like a stock. So you can invest here. A real estate fund is a type of mutual fund that primary focus on investing in securities offered by, who are offering, just look here, investing in securities offered by real estate companies. So if you invest in companies, those who are doing real estate, means you will get benefit, because if they get amount, means normally if you are owner of that one, shareholder, equity shareholder, they have to share profit with you. So this is the another technique or method or investment product which you have. So that's it from today's session. I hope you have understood this one. See you in next video.